Record.
Can you hear me? Can you see my screen? Can you hear me like loud and clear? I'm using my iPad now, so I want to know if there's a difference. Can you hear me clearly, right? Okay. So the topic we had last time, I'm going to take that topic again. Understand? Because of the network was bad, so I want to take that same topic again. Then I also fixed another class on Wednesday for me to have like the final class I was supposed to have. So this one will just be the class we had last time, but because of network issues, I'm going to retake the class again. So we've talked about the market structure, we've talked about inducement, we've talked about point of interest, we've talked about knowing when to pick your point of interest, knowing how to use your order block or your breaker block, the rules in picking a proper point of interest. Now, the topic I'm going to be talking about now is type of liquidity and how to take profits using those types of liquidity. When you place your entry, how do you know where to exit in the market? Because you can have a nice entry, be in profit, and later lose your profit because what? You did not take your profit where you're supposed to take your profit. So most people, because of pullbacks happening in the market, they get scared and exit a trade that was supposed to give them a nice profit. So how do you actually know where to take your profits? Now, that is where it boils down to types of liquidity. So the types of liquidity that we have. So first off, we have trend line liquidity. Now remember, when trend lines, we have the uptrend and the downtrend. So in that uptrend and downtrend, we have the trend line liquidity. So what do I mean by trend line liquidity? The market is trending in a particular direction, be it the uptrend or the downtrend. There's liquidity being accumulated on the opposite side. So for example, if market is trending up, there's liquidity being accumulated on the downside, which is here. That's why I call trend line liquidity. If market is trending down, there's liquidity being accumulated here. That is trend line liquidity. So if market is making higher highs and higher lows, higher highs and higher lows, while market is making the higher highs and higher lows, there's liquidity being accumulated on the downside here. So I'm market with liquidity being accumulated on the downside here. Same as if market is making a downtrend, lower highs and lower lows, there's liquidity being accumulated on the upside here. So what makes you a good analyst is being able to identify the pattern that market used to approach your point of interest. Now, majority of the time that market approaches a point of interest, let's say you're looking to sell, and your sell point of view, let's say, for example, your order block for your sell happens to be here for your sell. Now, as market is approaching that sell point of interest, which pattern did you use to approach that point of interest? That is very, very, very important. Now, remember, like I said, liquidity is a zone that market will eventually sweep. Market will eventually sweep liquidity, meaning that market will go and clear that liquidity. So, if, for example, this is your point of interest for a sell, the market will sell POI. Sell point of interest. And while markets are approaching that sell point of interest, the behavior and pattern which market followed to get to that sell point of interest is this uptrend, this higher highs and higher lows, higher highs and higher lows, higher higher. If this is the pattern that market used to approach that sell point of interest, it means for market to take profit, market will have to clear that entire trend line liquidity, the uptrend liquidity. So if you are taking your sell here, for example, it's your sell point of interest, your take profit should be your take profit should be here. That is clearing, the first take profit should be there because that is where the nearest draw on liquidity is. So if you're taking your trade here as from the sell point of interest, your take profit should be here where the trend line began from. So because for every uptrend that market is making, there's liquidity being accumulated on the downside. As for every higher highs and higher lows, there's liquidity being accumulated on the downside. For every lower highs and lower lows, there's liquidity being accumulated on the upside. So if this is your sell point of interest, I'm expecting market to tap into that sell point of interest. Expecting market to tap into that sell point of interest. Your take profits should clear the trend line liquidity. because this is where the nearest draw on liquidity is. Same as market being on a downtrend. Same as you just say, for example, you have a buy point of interest here. I will name this with buy POI. So this is your buy point of interest. And before market approached that buy point of interest, it was making lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. It means there's liquidity being accumulated on the upside here. And what liquidity will always be swept. Market will always clear liquidity. Market will always take out liquidity because I think you know that our inducement is liquidity. And what does market do? What market will eventually come out and sweep that inducement to trigger our main point of interest. Same thing as liquidity. Liquidity will always be swept. Market will sweep liquidity or take out liquidity. It's only in few cases that market does not take out liquidity. So if this is our buy point of interest and market, before market approached that buy point of interest, it was making lower highs and lower lows, lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. It means there's liquidity being accumulated here. So for you to take your profit, you have to ensure that market takes out that liquidity on this side of the chart. So if you're taking your buy will be here. Buy will be your buy entry. Your take profit will just be to clear that trend line liquidity that is resting up here. So I will look for, there's a chart on BTC. There's a chart on BTC. Or this chart on BTC. So this is BTC chart. This is our buy POI. So in this meant our order block, like our buy point of interest. Now, before market approached that our buy POI, what was it doing? Market was making a series of what? Making a series of what? Lower highs and lower lows. So if you pay attention, you can see it, lower highs and lower lows, lower highs and lower lows, lower highs and lower lows, while it approached our what? Our point of interest for a buy. Now, what does this mean? It means that there is trendline liquidity laying on this upside of the chart, because that is what market was, the behavior that market was doing to approach our point of interest was lower highs and lower lows, meaning that there's liquidity laying here on this upside of the chart. That is, here is the liquidity. So what does it mean? It means that if we should take our trade, our first draw on liquidity will be aimed at targeting to clear this trend line liquidity that market was creating while it was approaching our buy point of interest. So that was why when I took my entry from this OB, my take profit was targeted towards clearing the trend line liquidity that market engine built up here. So that is where my first draw on liquidity, that was exactly where my take profit was. And pay attention to what market, the market came out here and saw that trend line liquidity started reversing. Now, me knowing that my take profit should be, imagine extending your take profit levels way above here and not being sure of what market is supposed to do. The market comes here, sees that trend line liquidity and starts reversing. You'd have been a massive profit of about 2,000 and something pips. You will now end up taking a loss on that trade because what, you don't know where to take your profits. Now, also identifying the pattern that markets use to approach our buy point of interest will now not know where to keep your take profit. So any kind of pullback that markets makes, you start getting scared and panicking. You start taking closing your trade because you think the market is already going to start reversing on you from there. And at the same time, most people will now start taking sales from this zone, and then they will come to your DM and tell you, my sale failed from this zone. Why? But if you're paying attention, you realize that this is trend line liquidity. And before any reversal can occur in the market, for example, you're taking a sell. For you to start looking for buys, make sure that the sell has hit take profit, meaning that the liquidity that the market was supposed to take out with that sell, that it has already occurred before you can start looking for reversals to the opposite side. So for this trade, if this market stops here, you cannot start taking a sell from here, because why? There's lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Trend line liquidity that market is yet to be taken out. Meaning that if you're trying to take a trade when this trend line liquidity has not yet been taken out, you will be used as liquidity. So even if you're looking to take a trade from here, a sell from this OB, you still be taken out eventually, because why? Market has not yet cleared this trend line liquidity. The safe place to now start looking for sales is after market has cleared this trend line liquidity and market starts showing rejection that it cannot push up to the upside more. That's when you now start looking for sales, because why? The draw on liquidity has been taken out. So that is the thing with trend with liquidity. Knowing how to take your profits is, first of all, identifying the pattern that markets use to approach your point of interest. That is very, 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 very vital. So to know where to take your profit, you have to identify the pattern that markets use to approach your point of interest. If market is approaching your point of interest for a buy, and the pattern that they use to approach it is lower highs and lower lows, lower highs and lower lows, it means to take your profit, you have to clear that entire trend line liquidity that you made. So from the beginning of that lower highs and lower lows that market started making, that's where your take profit should be. If market is approaching your sell point of interest and the pattern you use to approach your sell point of interest is higher highs and higher lows, higher highs and higher lows, where the higher highs and higher lows first started from, that is where your take profit should be, to clear that entire trend line liquidity. That is that for. Can you not see me? And can you not hear me? Which one is my voice is cracking? Before I started, they said they can hear me and they can see me. Can you guys not see me? Can you guys not hear me? So who is the person saying that the voice is cracking? And please don't interrupt me. Okay. So majority of people can see me. Majority of people can hear me. Okay. So I've talked about. Okay. So I've talked about trend line liquidity. It's now time to talk about what the second type of liquidity that we have, which is what's the second one I have on the list? So I want to take it one after the other. The second one I have on the list. So I've talked about trend line liquidity. Now it's time to talk about equal highs and equal lows liquidity. Now, most people that studied chart patterns that trade double tops and double bottoms, those are actually also types of liquidity. Now, when market makes an equal low or an equal high, majority of the time, markets will eventually come out and sweep that equal low or equal high that market made, because that is another type of liquidity. So let's, for example, this equal high and equal low, there's liquidity laying on the upside of this chart here. And for the equal low, there's liquidity also laying on the downside of the chart here. So recognizing types of liquidity is actually very, very, very important. So for the trend line liquidity, market has to clear that trend line for you to know that the market has approached to take profits. But for equal highs and equal lows liquidity, market has to clear that equal high or equal low. Without market clearing that market is not actually going to make much movement. I've not actually seen markets give much equal high. Okay, I think I can see an example here. Here, this is an equal high liquidity. And what the market do, before markets didn't, the market came here to sweep it. So equal highs and equal lows also here, you can also see it here. Another equal high. It may not actually be perfect like an equal, but it's another equal high here. I don't think I have equal lows here, but whenever you see equal highs in the market or equal lows in the market, just know that that is another type of liquidity, and market has to sweep it. So if, for example, you are trying to take a sell and your sell point of interest is up here, and before markets approach as a sell point of interest, it made what? An equal low, which is a double bottom. If you're taking your profit target should be to clear that equal lows liquidity, meaning that your entry should be here and your first draw on liquidity will be where? Here. Because why? That is where the nearest draw on liquidity is. So most people that trade equal highs and equal lows not actually understand how to properly trade the concept. They just see patterns on YouTube and then they start trading it and they keep getting stopped out. So if market makes an equal low before approaching your point of interest, it means that markets will eventually come out and take out that equal low. So let's say, for example, your order block is here, or let me just say sell point of interest is right here. If markets should come and trigger your sell point of interest, your take profit will be to clear what? That equal lows liquidity. Now, this is where most people will now start buying from, saying, oh, they saw a breaker block here, so they will start buying from here. Now, on a normal day, that analysis may be correct. But if there is liquidity laying on the downside of this chart, you are not meant to be taking any buys until that liquidity has been taken out. For example, for each side of the chart in a trend line, there's always other blocks. So for example, you see an order block here. You will also see another block here. You also see another block here. You also see another block here. If market has triggered a point of interest for reversals, let's say, for example, this is an uptrend, and market now triggered another block here that's supposed to cause market to sell. You taking a buy from another block here, or here is not valid. Why? Because market has to TP first, and for market to take profit from a trend line liquidity, that entire trend line liquidity has to be taken out first before market can start looking for reversals. Listen to me again. Market can be on an uptrend. You take a buy from this other block, valid. Buy from this other block, valid. Take a buy from this other block, valid. If market eventually triggers a point of interest for reversal, don't try to start taking a trade in the opposite direction until that type of liquidity that market builds before approaching that point of interest gets taken out first. That's when most people make their mistake from. The market will hit, for example, another block for a sell. That sell will happen and come here. They'll start taking buys from this other block, disregarding the fact that market is already selling and the sell take profit has not yet hit. So before you can take a trade in any direction, ensure that the direction that market is traveling to, that liquidity has been taken out from that side also. So same as this, if market made an equal low or a double bottom and triggers a sell point of interest, and you know that market is meant to sell, don't start taking a trade from the breaker block that you see here, because why? There's a breaker block. Not every point of interest is valid. If you're taking a trade from this breaker block and market has not yet TP'd from this sell point of interest that they triggered, you're going to get stopped out. Because this point of interest has triggered already, and where market is going to is now to clear the equal lows liquidity that's laying here. Same as if market makes an equal high, which is a double top. If market makes a double top here, and if market makes a double top here, and then let's say, for example, this is our buy point of interest. If market makes and this is our buy point of interest, and it gets triggered, if market triggers this buy point of interest, your take profit should be aimed at clearing this double top liquidity here. So if you're taking a point of interest here, saying, oh, I can see a breaker block here, so I will take another sell here, you'll be taking out. Why? Because market has already triggered a point of interest for reversal. Paying attention, point of interest for reversal, not just any point of interest, a point of interest that fits the rules in picking a proper point of interest. So that point of interest that fits the rules in picking a proper point of interest, if it gets triggered, that means market has triggered the point of interest for reversal. And if market triggers that point of interest for reversal, don't start taking another trade in the opposite direction until the nearest draw on liquidity has been taken out. If you're taking a trade from this breaker block here, the nearest draw on liquidity has not been taken out yet. So you have to ensure that the draw on liquidity gets taken out first before you can now start looking for trades in the opposite direction. So if, for example, now this trend line liquidity that I think is on BTC. Okay, it's on BTC. So this, for example, before market approached this is my point of interest. What was it doing? It was making lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. And it triggered this my point of interest for reversal, because this point of interest fits all the criteria for taking a trade. There was a structure shift that's inducement, the other block here. So as market triggered that point of interest, I'm not going to start taking a sell from this breaker block that market made here. I will be taking out, because why? I'm taking a trade from a point of interest when market has not yet cleared the nearest draw on liquidity. That's how most people get taken out from a trade. You see them, the liquidity has not yet been taken out. For example, this other block here. This is trendline liquidity. You understand? This trendline liquidity, and market hit a point of interest for reversal. Let's say from here, this was when my started selling. Let's say a point of interest for reversal hits here. Most people will start taking their trade from this other block here. They will be taken out. They'll take a trade from this other block here. They'll be taken out. Why? Paying attention to the pattern that markets used to approach that point of interest. Markets used a what? An uptrend. And the uptrend is a part of trendline liquidity, meaning that there's liquidity laying on the downside of this chart. So if I'm to take my trade, I'll have to wait for this liquidity to be taken out before I can now start looking for buy reversals. So identifying the type of liquidity the market formed is actually very, very, very crucial and very, very, very important. Because if you're taking a premature trade before that liquidity gets taken out, you'll be taken out, you'll be used as liquidity. See, something here. This is what? Trend line liquidity. This low, higher highs, higher low, higher highs, higher low. So this is trend line liquidity. And when market started selling or started reversing, I am not going to start taking a buy from this other block here or from the one from this other block here. Why? Because this is trend line liquidity. Means that for me to start taking any trades for reversal, I have to make sure that this trend line liquidity gets what? Taken out first. So prematurely entering it is very bad. Ensure that liquidity has been taken from that side before you can now start looking for reversals. So I've talked about trendline liquidity, and I've also talked about equal highs and equal lows liquidity. Now, the other type of liquidity to talk about is what? Ranging liquidity. Now, what do I mean by ranging liquidity? When market is consolidating, or market is ranging from one point to another, that is support and resistance, support and resistance, support and resistance, support and resistance. If market is consolidating, there's liquidity always being built on both sides. So as market is going from what? From this is your resistance up here. This is your support down here. So as market is moving from resistance to support, resistance to support, resistance to support, this is a ranging market. Now, this is a ranging market. Most people will not be taking their trade from resistance, support, resistance, support. That is a ranging market. There's liquidity being accumulated on both sides of the chart. And the majority of the time, when market is ranging, making any ranging market like your support resistance, there's always point of interest below and above them. So there will be a point of interest here for a buy, and there'll also be a point of interest here for a sell. Now, whichever one market taps first. So this is what a ranging liquidity looks like. Markets ranging from support resistance, support resistance, support resistance, support resistance. This is what a ranging liquidity looks like. What does it mean? It means that there's liquidity laying above here and there's liquidity also laying down here. So there's liquidity here. So there's liquidity here. So there's liquidity laying down here. And there's also liquidity laying where? Up here. So as market is ranging or consolidating, you guys know it as a consolidation or a ranging market. Remember, I said there are two types of market movements. There's a ranging market and there's a trending market. You understand? So if market is ranging from any point, there's liquidity being accumulated on both sides of the chart. Now, in trendline liquidity, there's also liquidity, there's only liquidity being accumulated on the opposite side. But in ranging market, there's liquidity being accumulated on both sides. So this is a trending market. When market is trending up, there's liquidity being accumulated only on the downside. If market is trending down, there's liquidity only being accumulated on the upside. But on ranging market, when market is ranging from both sides, the liquidity being accumulated on the upside and also on the downside. So market will take out one and aim to take out the other one. So for example, let's say this is the range. This is the ranging market. Resistance, support, resistance, support, resistance, support, resistance, support. Now, something like this may eventually happen. Market will now come and do something like this. You understand? After doing this, it will now come back in. Liquidity has already been taken out from this zone. Do you understand? So if you are trading support, resistance, support, resistance, support, resistance, support, resistance, and market comes to this support, breaks past this, use this ranging liquidity for the support. If market does this, don't try to take another sell from this zone to push it down. It will not work. Market will take you out. Because why? Market has already taken out this support liquidity. This is the ranging liquidity. So if market takes out this ranging liquidity, what will you now do? We'll now start looking to take out the liquidity on this side. So market will now come out and break this resistance zone. That's when you now see market break past this zone. It might now come here and then sweep this liquidity before coming down. So liquidity has to be taken out for another side of liquidity to be taken out. So once market takes out liquidity on one end, it's going to take out liquidity on the other side of the chart. That is the market. That's why this strategy is liquidity based. So we have the trend line liquidity, the uptrend and the downtrend. We have the equal highs and equal lows liquidity. That is the double top and double bottom. Then we have the ranging market liquidity, that's support and resistance. So for example, let's say you are looking to take a buy and your buy point of interest is where? Down here, buy POI. And before market approached to buy POI, what was it doing? It was ranging between support, resistance, support, resistance, support, resistance, support, resistance before approaching your point of interest. So you now know there's liquidity down here, and also there's also liquidity up here. So what does it mean? It means that if markets will eventually come here and trigger your buy point of interest while sweeping this down liquidity, it means that markets will aim to take out liquidity on this buy side also. So if you are going to take a trade from here, which will be a buy point of interest, if you take your trade here, your take profits has to be where? Here, to clear the liquidity on the other side. So this is it, the trend line liquidity. The equal highs and equal lows liquidity. Then we have your ranging liquidity. So these are the types of liquidity. We have the trend line liquidity, equal highs and lows liquidity, range liquidity. These are the types of liquidity that we have. So if market approaches your point of interest using any of these patterns, if market is approaching your sell point of interest while being on an uptrend, while making a series of higher highs and higher lows, 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 if it should trigger your sell point of interest, your take profit should be clearing that trend line liquidity. If market is approaching a buy point of interest, and while it's approaching your buy point of interest, it's making what? Lower highs and lower lows, lower highs and lower lows. It means that liquidity being built on the upside. So if market should trigger your buy point of interest, your take profit should be aimed at clearing that sell, that sell, that lower, what do you call it again? That your trend line liquidity for the downside. That is your bearish trend line liquidity. So, and if market makes an equal high before approaching your what? Your buy point of interest, let's say it's your buy point of interest here, and market makes an equal high before approaching that buy point of interest, it means your take profit should target that equal high that market made. That is that double bottom, or that double top that market made before approaching your point of interest. So this is your buy POI here. Same thing as markets making an equal low before approaching your sell point of interest. It means that your take profit should be aimed at clearing that equal lows liquidity. Now, if also you have a point of interest and before market approached your point of interest, it was in a range, making going from support to resistance, support to resistance, support to resistance, support to resistance. If market was in a range and then market now triggers your point of interest, let's say, for example, your buy point of interest, your take profit should be aimed at clearing that range liquidity for the one on the outside. That is, if market is bullish and starts making a range, if you should clear that liquidity and trigger your buy POI, your take profit should be aimed at to target the other liquidity on the other side of the range. You understand? Same as if market triggers your sell point of interest. Let's say, for example, market was ranging. This is the range. So this is your range here. So there's liquidity here, and there's liquidity also here. So there's liquidity here, and there's also liquidity here. So if market should now come and what clears the liquidity on this side, your take profit. Let's say, for example, your sell point of interest is there. If this is your sell POI here, so if this is your sell POI, and market triggers that sell POI, the take profit should be to clear the liquidity on this side also, on the other side of the range here. So that is just it with types of liquidity. So if we take a screenshot of this, I will screenshot and I will send it to the group. I will take a screenshot and I will send to the group also. Sorry. So I'll send the screenshot of this to the group. This is all you need. Literally, this is literally all you need for your take profits. Because before market approaches any point of interest, there's always a pattern that market follows to approach that point of interest. And it's always one of these patterns. So either market approaches it with an uptrend, meaning that your take profit should clear that trend line liquidity, or a downtrend, means that your take profit should clear that trend line liquidity, or a range, means that if market takes out liquidity here, your next target should be the other side of the range. Same or market makes an equal high or equal low. There's always a particular pattern that market uses to approach a point of interest. That is what you need for your take profits. And there's another thing again, another vital, there's also another vital thing to pay attention to that you can also use as your take profits, which is what? A valid point of interest for reversal. A valid point of interest for reversal. What do I mean by this? Now, I said there are rules in picking a proper point of interest, right? I said it has to trigger a structure shift. It has to have liquidity protecting it. It needs to be the unmitigated. It has to be the closest one to liquidity. All those rules to picking a proper point of interest. So let's say, for example, you are taking a sell, yeah, and you now see an order block on the downside that has all those qualities that the other block triggered a structure shift to a break of structure. The other block has inducement, is unmitigated, all that. It means if you take that sell, your take profit should be close to that other block that markets may cause a reversal from. That is another. If you don't see any of these patterns that market uses to approach a point of interest, and you now see a valid point of interest that market may cause a reversal from, you can use that as your take profit also. So for example, you are selling and you see a buy order block, and that order block actually has all the qualities of picking a proper point of interest. You can set your take profit before that order block because markets may cause a reversal from it. Same as if you are buying and you see a sell order block or a sell breaker block, and that order block or breaker block has all the qualities of picking a proper point of interest, you can keep your take profit before that order block or before that breaker block because markets may cause a reversal from it. So I've taken a screenshot of this pattern. I will send it to the group. So that's how you take your profit. Once liquidity has been taken from this side of the chart, it's going to take out liquidity on the other side. So once you've gotten your entry with your market structure shift or break of structure, your inducement, and you've gotten your point of interest, how do you now take your profit? So let's say, for example, this was where the structure shift is. This down here is your inducement, and then this is your buy point of interest here. If you take your entry, your take profit should target the other range of the trade. If this is the sell that you are taking, this sell point of interest, you see your structure shift to the downside, you see your inducement, and market triggers your sell point of interest. And before it triggered the sell point of interest, it did what? It made an equal low or a double bottom. The take profit should aim that equal low or double bottom. If market approaches your sell point of interest, like you saw your structure shift to the downside, you saw your inducement, for example, this is what I mean. Let's say market does something like this. Something like this, and this is your inducement, and market does something like this. Do you understand? So now we have our inducement here. Do you understand? And then we have our breaker. This sell point of interest is our breaker block. So this is a sell, for example, because this was the previous uptrend. Market came here and made a structure shift to the downside. After that, this is the first pullback, which is the inducement here, but it did not mitigate this breaker. It means I'm using this breaker as my entry. Once market triggers this sell point of interest, and the pattern that it used to approach that sell point of interest is this uptrend, higher highs and higher lows, and market clicks here and starts selling, my take profit will be aimed at clearing this what? Trend line liquidity here. So once your point of interest has triggered and the pattern which market used to approach your point of interest fits any of these patterns here, it will now tell you how to take your profit. Do you understand? So take a screenshot of it, study it and master it, back test it. So if you have a question regarding what I taught now, don't ask questions regarding what I didn't teach, what I taught now. If you have a question. Can you hear me? Oh, my screen was not showing. I recorded it. So if you guys cannot see my screen, I recorded it. You guys will watch the recording. I recorded it now. The class is recorded. So you guys will watch the recording. It's not been for the past 10 minutes because I know when I took it, when this thing went up was when I took a screenshot of that pattern. I think that was when the screen went off. When I took a screenshot of that pattern, that was when the screen went off. So it's not been up to 10 minutes, it's like 5 minutes. And I've already taught the majority of what I wanted to teach before that 5 minutes, and it's recorded, so you guys will still see the listing here. So please, there's no point to record the screen. If you have any question regarding what I just taught, this liquidity types of liquidity, this particular topic I just taught now, please ask the question. Because this is actually the last topic. The next class I will have is just to summarize everything that I taught here. Like everything I taught, I want to summarize everything in the next class. Please, the question should be regarding what I taught in this particular section now. So, Gabriel. Hello.
Yes, hello. Can you hear me? Good evening.
Yeah, I can hear you.
Yes, you said something about liquidity sweep, about not entering into buy or sell when it has not closed out from the previous trend liquidity.
Yeah.
So yes, so what I wanted to ask is on your BTC USD trade, please can you take it to that point? So
Yeah.
when you were yes, so when you were focused on the liquidity clearing at your point of interest, it did not matter about the down part.
No, it did not, because market already shift structure to the upside here. This liquidity was already swept. If you pay attention to this side, this was market being on a downtrend, lower highs and lower lows, lower highs, lower lows. Market now broke from this downtrend. So this downtrend was already broken. Market already broke past this downtrend, made the inducement, and then swept that liquidity here before it now came to trigger this other block that caused market to shift structure from here. Then what I'm not targeting is the take profit for this particular trade. The pattern that market used to approach my point of interest was a downtrend. So I know that market will still sweep that downtrend liquidity. Same as market swept the downtrend liquidity from this side. And also saw the downtrend liquidity from this side also. Saw the one from this side, saw the one from this side. So if market uses a downtrend to approach your buy point of interest, the take profit has to sweep that trend line liquidity. If market uses an uptrend to approach your sell point of interest, market has to sweep that trend line liquidity on the downside.
Thank you.
Nathaniel. Nathaniel, I have a question.
Hello. Yeah. Hello. Good
Yeah.
evening. Please, can you hear me?
Yeah, I can hear you.
Yeah. Okay. Please, can you move to your gold trade? I think there's this liquidity pattern which wasn't cleared out.
If market does
22nd
not
November.
clearly, no, show me.
Yeah, 22nd November.
Here.
Yes.
Okay.
You see where I don't know if it's an order block or breaker block. You see below that one, there was a trend liquidity below it, which wasn't actually cleared out.
Where?
Where your point of interest is
This
at
is
the breaker block.
this is the trend line liquidity here. This is where market started the whole trend here. And market swept that trend line liquidity here to now trigger this breaker block for a buy.
No, I'm
So
talking below the lower breaker block. I think where you took a trade.
here,
Yes, this one.
market
Yes,
not trigger
go
the point
below
of
it.
interest now.
Yes, you see? Oh, okay. But there was a trend line liquidity below it,
Market will
which
not lose respect to
wasn't
you
triggered.
now. Yeah, but my strategy was what I analyzed. Market just did not trigger
Okay.
it.
Okay.
There are some cases that market will
Okay.
not trigger your point of view. It does not have to respect you majority of the time. You're not the market maker. You just analyze with your strategy. It's not 100%. It does not work every time. Thing is that if it happens to like trigger your point of interest, that's when you can now take the trade. Like you don't tell the market what to do. We analyze and hope market comes to fit our entry. Then we have our stop losses, our take profit, our risk management. You cannot tell the market what to do. You have to still remember that market is still being controlled by humans. Like we put money into the market to like add liquidity into the market. Like someone can pump in money into the market, or volatility. It depends on human emotions. So we just analyze with our strategy and hope for market to now tap our point of view. But if it does not, then it has already left you. You will not fit in 100% of the time.
Okay. Okay. Thank you.
Emmanuel Kosi.
Hello. Hello,
Yeah.
bro. Good evening.
Yeah, hello.
Yeah, my question is regarding session. I don't know, do you consider session on white trading?
Not really. I just if any session that market triggers my point of interest, I just enter my trade. That's not what I thought here. And I said question regarding to what I just thought. That's not this is something that you could have asked me in my DM. Please, if you
Yeah,
know if you don't have any question regarding to what I thought here
okay.
now, please you can just come and ask the question in my DM, please. Not
Yeah,
here.
what
The
is what
questions
is
I'm
correct?
taking now are the ones regarding to what I thought.
Okay, bro. Thank you.
I'm a winning judge. Yeah, what's the question, winning judge? Okay, no more questions. Caleb's iPhone.
Good evening, Tony.
Yeah, good evening.
Yeah, so my question goes thus. So in a case where you have this same setup, like lining up, because what I noticed on my chart, I will analyze using like the same setup. Market will not trigger it, and I'll see the same setup forming at, like, for example, it's an uptrend. I'll see that same setup forming at the top. I'll analyze place order. It will not still like come back to that point where I wanted to enter from. But if I scale down to the lower time frame, I'll now be seeing that same structure on the lower time frame. And if I try entering from that lower time frame, maybe from the 5 minutes where that structure that I'm looking for plays out, I do get stopped out. So in that case, what do I do?
Market does not move in one single direction without creating other structures. There's the external structure, there's the internal structure, there's the mini structure, the macro structure, the middle structure. Market will always have a general point of interest that it's going to come to. For example, this zone that market started buying from, there was also another structure that market made here. There's inducements here, there's the other block that market bought from, there's another one here, another one here. If your analysis is correct, just stay on your trade. Don't stay and wait for market to trigger your point of interest. If you are wrong and market misses your point of interest, that's when you can now start looking for entries on another time frame. But if you are correct of what you analyze and you're sure, wait for market to trigger your point of interest. Don't start chasing the trade. So because market will always keep making more structures. If market breaks structure, it will break another structure and break another structure. But eventually, it will still come back and trigger the main point of interest it's supposed to trigger. There are going to be multiple structures in the market, but the main one is where you should keep your entry from, because you're not going to catch everything in the market. So if you are correct and you are sure your analysis is correct, you wait for market to come and trigger it. The only time you can start looking for other entries is when you feel like you made a mistake in your analysis. That's just it.
Okay, thank you.
Image Pascal.
Hello, Tony. Good evening.
Yeah, good evening.
I'm just laughing because my question is not from what you expect.
What's the question? Please, if the question is not from what you it's just I'm just taking questions regarding what I thought here now, and I have to. And I don't think people have questions regarding what I thought here. Wait, I'm coming. Scott Lee. Scott.
Good evening, Tony. Can you hear me?
I can hear you. Good evening.
Please, I want to ask a question based on what you thought actually. Now,
Okay.
in the where the market makes lots of point of interest, what do we do in that case? Like, there is an exact like after a market structure shift, we can see the order block and we can see a breaker block, and then the market makes an inducement, and the inducement is close to the breaker block. But in some cases, while I backtest, the market will actually just, after taking out the inducement, it will still go down, take out the breaker block, then go back to the other block below. No, because you in the first class you said this thing after the inducement, the breaker block or the other block that is close to the inducement we should use. Understand? There's a case where the market will take out the breaker block and still come back to the other block. Not expecting
The only case market will do that is if market has triggered, if after market triggered a structural shift or break of structure, market mitigates that breaker block first before moving. That's when market will now come and invalidate that breaker block and trigger the other block. Or if market does a structural shift or a break of structure, it will create inducement. It will not mitigate the breaker block. It may mitigate the breaker block, push up again, but may not have enough liquidity to continue buying. It will now come out again and clear that breaker block and then trigger the other block again for more liquidity. That's the only case the market does that.
Okay, thank you.
Michael.
Hello, good afternoon, good evening.
Good evening.
My question is on like normally sometimes my problem I do have is whenever I set my stop loss, markets normally come trap my stop loss and still goes my way. That's why I have been asking you question like how do you set your stop losses?
So if you watch the videos, if you watch this first class, from the first class, I've
Yes.
usually been sounding about how to set your stop loss. I said if it's an order block, you put your stop loss below that candle of that order block you placed. If it's a breaker, watch the second video on breaker blocks. I demonstrated it. I drew a diagram step, and then I said if you want setting your stop loss, someone asked me a question about that, and I answered it. And it's inside that recording. If you actually watched everything, you will see where I said I've mentioned this like 3 times, 4 times already. Even when I was teaching on how to pick an order block, I talked about for when there's a wick on the body of the other block. I still mentioned where the stop loss should be below or slightly above the candles of that other block. When I was talking about breaker blocks, I also still gave an example again in that video, and it's inside that recording. In that class, it's also inside that recording that I sent to the class. It's there. So I don't understand how you're still asking me. Why are asking me how to do, because it's
Okay.
inside that video.
One more question. Based on what you thought now.
Okay.
Okay. My question there is concerning this liquidity and price coming down to your point of interest. For instance, sometimes like this thing happened to me recently on a gold. Price was like coming to my point of interest from I don't know, like if you check 1 hour time frame, there is a particular order block that the market tapped in a 1 hour time frame. And if you check 4 hour, market tapped a particular order block on 4 hour. And if you check 1 hour again, that is showing me like a clear short setup, whereby in 4 hours, it's showing me a clear long setup. Then I try shorting on 1 hour. The market stopped me out and keep pumping. I shorted gold from a particular order block.
Do you understand
Gold
that?
stopped.
Do you understand that there's what we call general trend of the market? For example, Bitcoin has been buying since like Trump became president, and the whole news is making Bitcoin bullish. If you're selling Bitcoin as of last week, you're going to get stopped out continuously because why?
Yes.
Bitcoin is on an uptrend. Understanding the general direction of the market is very important. The market is on an uptrend. Be looking for buys. It's not some structure shifts to the downside is just to trigger another point of interest to continue market going up. If market is overall bullish and you see structure shift and say you saw inducement and the other block, market may just be doing that to trigger the main point of interest that markets will continue buying from, not for sales. You cannot see an overall trend that is clearly bullish and then you'll be looking for sales on that trade.
Okay, like for instance, gold have shifted structure. There is a particular higher low that have been broken on gold, but gold still violates the whole short setup. Like
Gold is bullish. Gold is bullish. Gold and BTC
like,
have
can you
been
give
bullish
us
since
a
last
clear
week.
market structure shift, a clear market structure that
Watch
once we
the
see it,
videos. I cannot start talking about market structure shift in this.
but it's the
Gold
same
is
thing that
bullish.
displayed on gold, but it's the same thing that displayed on gold.
Bro, don't worry. Come and show me the setup. And if it's not the same that is playing on gold, we're going to know your
Like
display.
it's
Show me
a
the
clear
setup.
higher.
Wait. Calm down. Stop arguing. Calm down. Where's the setup? I'm coming.
Okay, I can't, you are
Calm
not sharing.
down now. I want to show you the setup. I want to go to my chat. So show me the setup. Where's the
Okay,
setup?
1 hour. Go to 1 hour. Scroll down. Check where the gold like the all time high.
Where is it?
Go by your left a little. Let me show you to you.
Where? When did you take
The
this trade?
good all time high.
When did you take the trade?
Last week. Last week that ended.
That's on
Good.
Friday.
Yeah, last week. I took on Thursday, like 2 points of interest. They stopped me
That
out.
is here.
Not this place, like former good all time high, the all time high.
You said it was last week that I took the trade.
No, I mean the last all good all time high, the last general all time high on good. Like move your left. Yeah. This is what I'm looking for. See this higher high that have been broken. Yeah, this is what I'm
Where?
trying to show you. You see
Where?
this. You
Here.
see, market is an uptrend.
Is
Yes,
it here?
market broke. Yes, that's what I'm trying to show you.
Okay, here. So you said that you took a sell from here and you got taken out.
Like this is like this particular high. You see,
Took a trade from this high, you got taken out, right?
wait, market broke that high. You see the low that gave us that high. That's what I'm trying to concentrate on. The low.
Here.
No, go down. Yeah. you see that markets are broken, it's giving us a
I
clear
don't
shape.
know. What are you pointing? What are you pointing exactly? Where did
I'm
you take
trying to say that
you took a sell, right?
Yeah, like from this breaker block here now, you see that market has
Yeah.
shifted structure. No,
Took a
go
breaker
down,
block
go down. No, go down, go down, go down, go down. Here now, that place you are pointing now. You know,
here.
could have
Is it here?
no. This below it. That week you are seeing there now.
Okay, this week here.
Market, yes, that place
What
now.
happened?
Market, that's like that market shifted structure there. So you see, market shifted structure from there.
How the market see structure today? If you pay attention here, what was market doing here since? Is the market not bullish? This was a break of structure to the upside. This the market
No, I
doing there
mean,
was an inducement. This what you're
external.
calling a structure, calm down. What you're calling a structure shift is the market coming to trigger this other block here. And you're calling it a structural
I'm
shift.
not focusing on that place you are going, boss. Like I'm trying to show you something. Gold is making series of higher highs and higher lows. So the recent higher lows have been broken by like last week. If you move it a little bit right, like if you move it by your left a bit, you see that gold have broken that higher low. Not those internal ones that you took the trade, not those internal ones. I don't know if you understand what I'm trying to say.
What are you talking about? Which trade did you take? Did you guess? Just tell me the trade you took that got you stopped out. Let me know what you're talking. Which trade did you take? So tell me that market. What did you take? Which trade did you take that got you stopped out? Tell me that gold shifted structure. Which trade did you take that stopped you out?
Okay, you see, we are on generally in uptrend from
Which point
here.
of interest did you take that stopped you out?
Breaker block.
That is this one. Is it this one here?
Not inside here, not inside. External.
Where now here?
No. Below here. Below here.
Here.
On that week.
Here.
Yes.
You took a sell from here.
Yes.
You took a sell from here.
Yes. Like today.
Another question, please. How can you took a sell from that zone? I beg another question.
I don't know. It's from the left side. Market broke it. Market
did not break any structure. Market went to trigger another block for a buy. It's as simple as that. You are wrong with your analysis.
Boss, you didn't understand me. You didn't understand me. Ah, God.
Please, Samuel.
If you want to sell, like it's you like what market structure should happen. Well, this guy have cleared it already. If not, there's the market structure that happened to the side. After that market structure, there's the pullback, which is the inducement. And the second
Good evening.
Who is talking? Hello, someone.
Yeah.
Continue up the normal trend of the market. You'll have cast if they and leave the market immediately. You know what this one is saying? Yes.
Yeah, what's your question, please?
All right. Please, I'd like you to go back to the BTC chart.
Okay. What's your question?
On liquidity.
Okay. What's the question?
The screen is not showing. Okay. I'm with you now. Now, this particular trade that you took, can you kindly explain the break of structure and the POI before taking the trade?
This is not this is not the question that we have in this. Like asking me a question on how I took the trade I took, not about what I just thought. This is not a question on liquidity. You're asking me a question about the trade I took. This is not the topic for it. You're asking me a question about the trade that I took or why I picked my point of interest, not regarding what I thought in this class. This is not before I even talked about this, I also explained it in this class, saying that I saw a structure shift, that there was a downtrend and market shifted structure to the upside, made the inducement, and then I took my entry from the other block. I talked about it before before I started explaining this whole thing. I talked about it here. So, and it's still not even the topic that I thought now. They're asking me a question on. there are people that have questions regarding a topic that I thought, because this is the particular topic I thought we are on now, not about how I took the trade that I took. Because I will just take 2 more questions. Then I'll close. Investor Fresh.
Good evening, boss.
Good evening.
I have just 3 questions to ask.
Now 3
concerning
questions,
this
they just. Oh, wow. I asked.
First question. Do you use buy limit or sell limit to take your trade?
How is this
After
what I thought
wait.
now?
After the liquidity
How is this what I now? How is this what I thought? Why wanna do like why wanna do like
please
this? Why
hold on,
wanna
just
do me
listen
this
to me.
thing now? What I do on self? What I do now? In Cameroon, eh? And I just they pull me for talk like this. It
You
good.
still the same. I'm asking this
You know good. This is
question
no good. You
particular to
know
this
fresh.
your
This I do no. It no make sense. Why would I? Now when I did wicked though.
please, boss.
Nah, just evil. Nah, which one we say I they
That's
use
the
use
first
by limit or
question.
semi? Now we take the waiting.
The reason why I asked the
How?
question is let's say after the liquidity sweep,
Eh?
do you use buy limit or sell limit, or you enter trade
How is this
after
a
the sweep?
question? How is this
After the sweep,
how is
do
this a
you
trading
enter the
strategy
trade?
question? Is that not up to you to know if you want to use buy limit or sell limit, or you want to enter manually? Is that a trading question? It's like it does that fit any? Nah, they put me for talk. Oh, now wow. I beg, ask me question. This is what I thought. I mean, I don't tire. Seriously, I don't tire like this. I never chop. They put me for talk like this. Aye. You know, with buy limit or selling. Buy limit or sell limit is up to you now. If you're awake, enter manually. Say buy limit or sell limit if you know go there active. How does that fit into a strategy question? Eh? God. Oh, wow. I beg, I'm tired. Yeah. It could be another time. Then I think someone else. There's someone who time a question. Nobody will raise and again. Next time, I beg. I have another class to teach you guys on Wednesday to summarize everything. Most people just like frustrating me with questions. They watch the videos, the recordings, everything you need about the strategy is inside that question, like inside that class. Every single thing. In fact, if I give this recording to someone else, like most guy, they go they profitable because most people just don't want to calm down, sit down, and actually analyze trade. And most people are already trading live accounts now. November class, November never finish, class never finish. They don't open live accounts. Then once they open live accounts, they'll take a trade. When they have not yet mastered the strategy, they will take a loss. With the frustration, they will now start putting their losses on you. Meanwhile, they've not yet mastered the strategy. They've not practiced on a demo account to ensure that they are profitable with strategy yet. They're jumping on live accounts, blowing that live account, being frustrated and looking for who to blame. It does not work like that. Practice on a demo account. If it does not work the first time, back test, practice again. I will only teach you what I know. I will only give you the resources. I'm not going to put it inside your brain. I've taught. Your own is to now watch, understand, and practice. That's just it. Everything. It's not possible that I will teach some like 20 people will understand, 30 people will understand, and they are trading it and trading it well. And then you are not understanding. It's not from the person that taught you, it's from how you understood the thing or how often you practiced. Other people cannot understand market structure sheet and you're having problems with it, and it's now the person that taught you, the fault of the person that taught you is from your side. I'm not saying you will not get it, but take time to actually understand and study it well. Most people will carry questions full, but they won't actually backtest or take trades on a demo account. They are jumping into a real account. Most people would ask you to send them signal. You one particular guy where they always enter my DM, where I go use, I mean, I go teach you one day. But they always just they ignore them because I'm a student. You're here to learn. The time you will make money from the strategy. Before, when I was learning this thing, I was not making anything. I would make money, I would lose money. Everything started paying off when I mastered everything well. There's always time for everything. You cannot be in your learning phase and expecting to make the same amount of money that I'm making from the strategy. Meanwhile, you are still learning. The stage you are in now is the stage I was in last year March. like learning wise on the strategy. You are new to it. Understand? So take time to practice what you are being taught. Understand? Nobody goes to school and graduates in 1 month, understanding their course in just 1 month. That's why it's a 4 years course. You don't just expect trading, one of the hardest ways to make money, but the best ways to make money and has the highest return. This thing, like your profit returns are actually very high, and you expect to beat everybody immediately by just in 1 month or in 2 weeks or 3 weeks. It's not the fault of someone teaching you. It's you yourself mastering a strategy, learning, backtesting. Continuously backtesting did not take me 1 month or 2 months or 3 months or 4 months to understand the strategy. And nobody even taught me self. Nobody gave me guidelines. I had to backtest and get everything myself. Do you understand how it is to backtest with no guidance and still be able to understand the strategy enough to be able to teach it out here? Means that everything I learned and everything I'm teaching you guys, I learned from myself. Now most people have guidance and they are still not understanding it enough because they're not taking this into, they're not practicing, they're not constantly practicing. Everybody go just define shortcuts to make $100, $500 instead of embedding themselves with the knowledge. Most people go define shortcuts to collect signal to do this on this thing, but they will not come down and actually understand the strategy. You are rushing everything. I started trading this strategy last year. And before I started teaching, I didn't teach anything because I wanted to be sure that I understood everything before I started teaching. That was why I started teaching in July when I already understood the strategy, compiled everything myself. Nobody taught me jack shit of this strategy. No single body. I backtested everything from A to Z. I backtested everything, forward test and everything for me to be able to master it to this point with no mentor. And I'm now giving you everything and you're still like complaining on this. You have to calm down. It does not happen in 1 week or 2 weeks or 1 day or 1 month, 2 months. You have to keep practicing until it becomes easier for you. That's just what I have to say. Stop rushing everything. You still make money. You're not dying this month. Even if you will die, no difference again. But just continue practicing. There's still next year to make money. There's still next year to buy that car. There's still next 2 years to buy the car. You're not rushing anywhere. Calm down. Understand this. This is a skill that will pay you for life. Stop rushing everything. You don't have to trade a live account now. If you don't make profit this month, does not mean you don't make profit next month. There's still next 3 months to make profit. So just calm down first. Stop rushing everything. You understand? If you're wrong, accept that you're wrong. And then keep practicing. I'm tired because I literally made everything easy. Like everything that took me how long to learn, I compiled everything down. If you see how it took me, how scattered it was for me to learn this thing, it was very scattered. I traded trend lines. If people know my TikTok, I've traded trend lines, I've traded support and resistance, I traded falling wedge patterns, I traded candlestick patterns. There's not like no trade. I now narrowed everything down. This trend line liquidity you're seeing here was not, it was not somewhere that I learned it. I learned it because I traded trend lines before. The range liquidity that I know, I don't learn it from somewhere. I learned it because I've traded support and resistance before. The equal highs and equal lows, I learned it because I've traded double tops and double bottom before, and I kept getting stopped out if I used it. So that was why I was able to learn that there was liquidity above and below it. I learned from losses, and I'm not teaching people for, like, most people don't know how lucky they are to have someone guiding them through anything. So just calm down. If you learned the way I learned, I supposed to go there, you quit trading because I lost a lot of money, like a lot of money. The first month I started trading, my first trading week, I lost $10,000. The rest of the month, most people think it's, but if anyone goes down to when I started trading, they will see what I'm saying. I traded trend lines then, falling wedge patterns, candlestick confirmation. I traded everything before I now compiled everything and narrowed it down to this particular strategy now that I'm using. So calm down, understand a strategy, back test until you're profitable in demo account, then move on to a live account. Stop stressing people with your losses because the time you're supposed to be learning, you're using it to try and make money on a real account, but you've not yet mastered what you're trading. So that's just it. Until next class.